Traders, today I'm coming to you with yet another powerful trading strategy. This strategy is going to be using the 1 hour fair value gap in combination with 1 minute time frame entries, and it is tested. It will give you fantastic results. My name is Chris. I am the owner of Chris FX. I'm a 7-figure funded trader and I'm helping traders become profitable on a daily basis. Let's now begin with the video. And here we are. This strategy takes place on Nasdaq once again. And I'm gonna teach you which 1 hour fair value gap to use. There is a small trick coming into it again. And I'm gonna talk about the 1 hour fair value gap rules, because there are certain rules that we need to follow. Then we will scale down to the 1 minute time frame and we will see the exact entry, which is way different from the usual that you always know that it is a change of character and then you need price to retrace somewhere and then you take the trade. This is way different than that. And then we will check out the exact entry, stop loss and take profit. All that being said, let's now proceed to the next slide and I'm gonna show you the exact rules. Now here I know that I'm saying example 1. We only have one example because of time restrictions. Usually, as you know, until now I'm placing 2 examples, one bullish and one bearish. This example is gonna just be a bearish example, guys. So you will reverse what we will be talking about in this bearish example and you have the exact same thing for the bullish example. There were some time restrictions. So let's go ahead and talk about the first, let's say, kind of rule. We need to just identify a break of structure. Now, if we take it step by step right here, do not go and move forward on this video. This is a mistake that many of you are doing and you are not staying, you are not watching the most valuable stuff. Some of you believe that you know everything, which is a very bad mindset for trading. Just go ahead. As you see it on this slide, this is why I'm showing you the slides one by one for you to first speculate, also the beginners, speculate on where the break of structure happens and why, and then follow the video as I'm moving to the next slide. Also, with the things that I'm teaching in the academy, I know that many people are passing through the strategies quickly. I have a bunch of strategies there. I want you to go and test them step by step. Let's proceed. Where is the break of structure happening in this image as I have it right here? Okay. If you have identified it until now, then this is very good for you. The break of structure happens exactly right here. You will tell me, why doesn't it happen right here? This is another break of structure. Do not worry about it. Do not overcomplicate things. This right here, my dear friends, this is a valid low of the 1 hour time frame. In this example, in this situation, those represent 1 hour candlesticks. Those are 1 hour candlesticks, okay? This is a valid low. Why? Because it is lower than the low to its left, you see, and it is lower than the low to its right. And if you want to identify a break of structure from the bottom, from below, because you want to short, you are looking at the lows, not at the highs, okay? Again, I'm making those videos very detailed because I want even the beginners who join and watch those videos to be able to understand everything with one video. I don't want them to go ahead and watch 2,000 videos to identify what is a low, what is a fair value gap. So every single video that I have been making for the past 2 months, it is also aimed for beginners and it stands, let's say, every single video stands on its own. So you will be able to identify everything and learn everything, all the concepts that I'm teaching within the video. I mean all the concepts that you need for the certain video, for the certain strategy. So, as I say, we do not care about the overall direction of the price. In this occasion, it happens that if we follow the most recent leg right here, of course, if you see it from the past, it was something like that, okay? So we identify a break of structure. Now, Once we have identified the break of structure, as I say right here, we are ready to move to our next rule. Very important, guys. Very, very important. It does not matter, as I say right here, that the candlesticks that created the fair value gap are also responsible for the break of structure. And I'm referring to candlestick number 2. This might be a question of yours, of some of you who are overthinking. I am such person myself, so I decided to clarify that as well. What do I mean by that? In this occasion, you see that we have candlestick number 1, number 2, and number 3. And why have I placed numbers on those? Because as you will see later on, those are the candlesticks that created the fair value gap. But bear with me, it doesn't matter that those are the candlesticks that broke structure as well. This series of candlesticks could have happened later on. So the break of structure could have happened with other candlesticks, not necessarily by the 3 candlesticks that created the fair value gap. This is something that I wanted to talk about, of course, before we proceed. Let's now proceed to the next slide. There we go. Now, as I said, we want to identify for this strategy, you will see it here in the green bracket, let's say, we only identify the very, very small fair value gaps, such as the one that we see on the left. And this is the whole point of this strategy, to identify the smallest of the smallest fair value gaps. Okay, we go ahead and highlight the area. These are areas that many people are not paying attention to. Remember that. So this right here, guys, is the point of the whole strategy. Nonetheless, as I'm regularly teaching in the one-on-one lessons, I'm teaching all of my students how to identify very tiny areas, how to narrow down the areas, the large areas, to smaller ones. And no, it does not have to do with scaling down to lower time frames. You just do it from one time frame. So just go ahead and do the best investment of your lives. Many of my students have become profitable, guys, especially, of course, those who have the right mindset and they're getting into trading with a very nice mentality and not a gambling mentality, guys. Okay, let's proceed now. Here, we now go ahead and highlight this area. You just go ahead on the trading view, you highlight from the one point to the other. You have the magnet tool on the left side, you will find it somewhere. You have it activated to a weak magnet so that it automatically just adjusts here to the bottom and also adjusts to the top of the other candlestick. You double click on the highlighted area and you click on extend to the right. And this is the way that you add this thing right here. You extend it to the right. And now we proceed with the next rules. Now, further rules, as we have talked about them in one of my previous videos, maybe the video that I created 3 or 4 weeks ago, I do not recall. A further rule is not only that the area should be tiny, the fair value gap should be a tiny one, candlestick number 1 out of the 3 that created the fair value gap must have a wick below. As you see, here we have a very large wick. It could have been a smaller wick as well. And candlestick number 3 must have a wick above. And here we see that candlestick number 3 has a huge wick above. It could have been also a tiny wick. We don't care about it. In this occasion, it is even preferable, even more preferable, we would say. So, all of the rules until here are fulfilled. We can proceed to the next slide. In a bullish example now, guys, of course, that would be in reverse because we don't have a bullish example in this occasion. So, candlestick number 1 should have a wick above. So, candlestick number 1 in a bullish example would be that. Let's suppose candlestick number 2 and candlestick number 3 should be that. And here would be your fair value gap. And here candlestick number 3 would have a wick below and number 1 would have a wick above. Okay, let's proceed. Now, another further rule for this strategy. Of course, I know that I said we are looking at the most recent leg, let's say. You will tell me, Chris, what are you talking about? The most recent leg here is this one. You would be absolutely right. I mean a leg that fulfills all of our rules right here, okay? And the leg that fulfills all of the rules right here is this large leg, let's say, over here. Why does it fulfill all of the rules compared to the other, let's say, legs? Because this one also has grabs of liquidities. So price comes back here. Of course, you will tell me it gave those traders who identified this one as an order block, let's say, it gave them a trade. That's very good. This proves to you that trading is working no matter how you trade. You just need to follow one strategy and be consistent with it. Of course, but with this current strategy, we will be identifying at least one liquidity grab. And you will tell me, Chris, you forgot about this liquidity grab. You will be absolutely right. I just saw it. So there is a liquidity grab here. There is a liquidity grab here. And of course, in the recent leg, there is another one here. Why? Because this is a high that has been created on the 1 hour time frame. Why is this a high? Because it is higher than the high of the candlestick to its right and higher than the high of the candlestick to its left. This is actually 3 liquidity grabs now. We saw it together, of course. Okay, this is also a high, by the way. It is higher than the one to the left and then the one to the right. And price is coming right back into the tiny 1 hour fair value gap that we identified all the way to the past right here. If you pay attention, it is the very same area. Now, how are we entering? Are we entering instantly? No, we are not entering instantly. We will see on the 1 minute time frame on this next slide right here. This one, this blue zone, represents the 1 hour fair value gap that we saw beforehand. What do we do on the 1 minute time frame? Do we wait for a change of character like that and then identify an area? If you do that, many times you're going to be missing your trade, or many times price is going to be coming back and it will be stopping you out. As a matter of fact, in the one-on-one, I'm teaching something very spectacular as an entry as well. Not only the strategy that I'm teaching you is something else, something that you will be winning above 80% of the time. I'm also showing you a specific entry which is way different than any single entry that you have seen, and I explain why it is a better entry, and of course you can see it if you backtest it as well. So, what are we waiting for? On the 1 minute time frame, we just identify the first 1 minute fair value gap that is being created after you have the reaction from the hourly fair value gap. Here, do we have a fair value gap between this candlestick and this one? If we say 1, 2, 3, no, we don't. Why? Because this week and this week, they fall upon each other. This means that they do not leave a gap, okay, between them, so a gap on candlestick number 2. But if you take those 3, 1, 2, 3, is there a gap? Yes, between the wick of candlestick number 1 and the wick of candlestick number 3, and by the way, it is not necessary that you have wicks here, it could have been a body, but there is a gap that is left untested in candlestick number 2. This is what matters, this is your fair value gap. You extend that to the right and you enter with a sell limit in this occasion. Why a sell limit? Because we are selling above current price, so it is a sell limit. If you would be selling below current price, that would be a sell stop. Another lesson for you. There you go. Of course, guys, in this occasion, I should mention that this right here, the body of this candlestick, where this closed, also, if you just compare it with where the fair value gap is, they are so close that you could be selling with a market execution. There is no problem at all. So we do not wait for a break of structure or change of character or however you want to call it. Okay, we just enter from the first fair value gap of the 1 minute time frame. So your entry, the stop loss goes right above the area, or you can just place it above the zone, the blue zone. It is fine, minor differences. And you can take profit, guys, at any area, any single area of liquidity, such as this area or even lower, as I have highlighted right here. Now you see that from the fair value gap that we had identified on the 1 minute, which is this tiny line that you see, price indeed came back to it and activated you in the trade, but you don't even need to do that in cases such as this one, where there is just a minor difference between the fair value gap and the current candlestick. You can sell as it is. This is 2 ticks difference only, I think. Something like that. But as a general rule, you place your entry there. Then, from the change of character, if you take a look at it, of course, a change of character happened here, so then you would be entering right here. But with my entry, you are entering even higher, the first FVG, which is in a premium. Or you can also go for high RRs with this strategy, because this will not play out always. So when you go for it, go for higher fixed RRs if you want rewards to risks. Now, regarding the trading signals, these are the results of my exceptional strategy, but we have started also taking some trades within the day. This takes place at 9:30, but we are also taking some other trades which are very, very successful. Okay, and these are the results from the past 6 months, guys. Okay, so pretty fantastic results. Links in order to join my programs, the academy, the signals, and the one-on-one, which is by far the best program. There's no question about that. You do it once and you know for a lifetime. Especially if you are already an advanced trader. If you are a beginner, you might need some further lessons. You can find all of my links either in the description or in the comments section. Those videos again take a lot of time for me to make, so I would appreciate it if you go ahead and subscribe to this channel, leave me a like, share this video with all of your trading friends, parents, siblings, whoever might be interested in trading. And this is gonna do it for today, traders. And thank you all for watching. Until next time.